Welcome to UBP TV. Let's concentrate on the US economy this month. The US growth has disappointed and GDP data for the first quarter revealed a sharp fall by 2.9%. Is the US economy in a recession? How can we say the US economy is leading the recovery among developed countries? First, let's have a look to the recent US growth trend. Just remember that US growth was particularly strong in the second semester last year, with a 2.6% growth in the fourth quarter and a 4% rebound in the third quarter. The strong activity was fueled by a robust growth in domestic demand, a rebound in exports, and positive contribution from rising inventories. It appears that this activity was probably running above its potential. This has ended abruptly in the first quarter with a 2.9% fall in GDP. This was mainly due to the bad weather conditions explaining the contraction in investment, minus 3%, the mere growth of consumption, just 1%, and the sharp fall in inventories and in net exports. These last two specific factors have negatively contributed to GDP by 3 percentage points. So, is it a recession? A recession is traditionally defined by at least 2 negative quarters for GDP. We do expect a 3.5% rebound in the second quarter, so this negative episode will be seen in the future as just a blip or a glitch. At the end of June, all monthly indicators point in favor of a 2.53% growth for consumption that should underpin this rebound. If we look at confidence indicators, we have recently seen a rebound in consumer confidence, and the business confidence has reached new highs in the service sector and stayed at a high level in manufacturing. These are positive signals and comfort our scenario on US growth. This economy is able to regain more positive momentum and to reach in the coming quarters the sustained trend we saw in 2013. US growth should probably settle on a 2.5% growth range on average this year. We do expect a rebound to 3% next year based on two major factors: a sustained consumption growth underpinned by job creation, rising real disposable income, less fiscal drag, and remaining positive wealth effect. And second, a renewed capex and productivity cycle in the manufacturing sector. This scenario is optimistic, but it seems to be close to what the Fed is expecting, a 2.1% and 2.3% growth for this year and the 3.2% growth expected for next year. Let us conclude with a few points. The US economy should rebound in the coming quarters with potential positive surprises. The US industry will continue to benefit from low costs of energy, with probably only moderate impact from the geopolitical situation in the Middle East. The US firms should remain highly profitable. A rebound in capex and productivity should fuel stronger EPS growth and maintain margins at a high level. The economic policy is pragmatic. Neutral fiscal policy and still cautious monetary policy should support this cyclical and structural rebound in the US economy, even if the Fed prepares its exit strategy in 2015. Thank you, and see you soon on UBP TV.